We are live. Gonna give this literally 25 seconds and then we will begin promptly here. Just gonna make sure that everything is showing up. All right, we can see. Let me make sure I can hear. Yes, I can. Gonna pause out here on YouTube. All right, close out of Telegram. And hello, everybody. Welcome to the stream. I am here with a very powerful trader who I will be happy to introduce you to a little bit later on. But for right now, we do have a standard disclaimer up. It's expected of you to be aware of the fact that trading does involve risk if you are present on these streams, but we do just have to remind you that in these moments of us sharing analysis, really when it comes down to you taking action, it has to be your decision. You have to be fully prepared and aware. So anything that we share here, it's simply speculation. It's not investment advice. And we hold zero liability for any losses or profits that could occur within your account. So you can view a full disclaimer on the Start with Trading webpage. I'm going to go ahead. I'm going to take that down. I am going to stop sharing this momentarily and put up the actual charts. And yes, Dylan, you should be able to see it a little bit better now. I'm not sure if you're watching it on the Hangout itself or through YouTube. I'm just going to give this 1 second, make sure that it's coming through on the YouTube link. I can see it clearly. If anybody in the chat that's currently watching could just confirm that you can also see and hear on the YouTube, it'd be greatly appreciated. And yeah, Dylan, I mean, I know you are on Hangouts. I know you're on your phone too. So I'm not too sure why it's not letting you see, though. It is recorded and you are on your computer. So I'll put the YouTube link in here for you as well. You want to just go ahead and you can pull that up easily. Sherry, thank you for confirming. And once again, everybody, welcome. So we are going to get into the analysis now. And what we have on the screen currently is gold. We're looking at the daily chart. This platform is TD Ameritrade's Thinkorswim. And you can see that, I mean, aside from these green lines, which I'm not really going to do anything about right now, my charts are fairly simple. It should be fairly clear if you are a little bit more experienced. I'm talking 6 months to a year. And you're familiar with concepts like Fibonacci's, supply and demand, moving averages, and that's more or less what we're looking at, besides true price action patterns and just starting to consider what it is that could happen. There is also volume and a RSI, relative strength index, on the screen. So thank you once again, everybody, for confirming. Now, when it comes to what we're looking at, I want you to first pay attention to this red and green rectangular zone. The red level is what is called an area of supply. Now, some of you may be aware of concepts such as support and resistance. And if we want to think of it like that, supply, this zone to the upside of where price currently is at, would be our resistance, so to speak. We can see back here, 2016, we did have this large bullish movement right up to our 38.2% daily Fibonacci level. And then that led a very nice downtrend into the 2016 year. We got some stalling as we approached the lower limits of the 1100 price range. And then, of course, we traded up. We have formed what is really looking like a beautiful pattern, in my opinion, for what is happening. This could be a harmonic. It could be a W. It really depends on your perspective and your knowledge that you have in the market at this time. And really, if we want to take this further before we talk about what could happen for tomorrow's non-farm payroll job reports, we're going to take a look at the weekly here. You can see the Fibonacci even more clear, and I challenge you to go and draw something like this on your charts for whatever asset it is that you're looking at. For gold, I've simply took the most relevant high, in my opinion. This was from the 2012 year. I took it all the way down to the low that happened over here in 2015, and then we can clearly see our levels. There would be a 23.6 fib if I wanted to put that on, just so you could see where it would line up to for reference, right here. So I mean, that's beautiful example of how Fibonacci's work, in my opinion. We do have a bearish candlestick printing at this time, and with our moving average, for those of you who do not yet understand the purpose of having this technical indicator, essentially a 200 exponential moving average, which is what we have here on the screen with the purple dashed line, it is taking the data of the last 200 candlesticks, averaging the price out exponentially, and then printing where that would be. So right now, of the last 200 weeks, the average traded price is at 1257.1 on the gold futures market. So what does that mean? If we go and if we look even further, we can see here on the monthly, all throughout the beginning of 2017, these first months have been bullish candlesticks. Now, we do have a bit of a confusing candle that printed on our screen here in the month of May, and it is something that's very significant. For those of you who can't see it, I'm talking about this right here. And why I say it's significant is because if we get the right angle, we can see that it is still a bullish candlestick. We can see that it's very similar to what happened right here in this month of March. And look at how long these wicks are. If we wanted to go and put on our trend line so we can see, the month of May was about $54 and change in a bearish wick that we had. And over here in March, it was about 51.2. So I mean, $50 in traded volume to the downside, and we still managed to push up with that bullish momentum. And really, my long-term outlook on gold is to the upside. And I'm not talking just to this first area of supply that we have here, but really looking beyond it into the 2018, even the 2019 year, really to see us trading even above this 1500 level once again. But how can we take this bigger picture and really look and focus on an intraday trend? What we're doing, at least for me, I will be trading the non-farm employment change on Friday, June 2nd, 2017. For those of you who have never even heard of this economic event, the simplest way that I can explain it to you, it is the change in the number of employed people during the previous month. So what is being released tomorrow is going to be looking at May's data, and it excludes the farming industry. So this report is a US dollar focused news. And of course, right now, the projected forecast is around 180,000 employed people added to the economy or to the country in the month of May. The previous release, looking at what came out in May, was 211,000. So they are projecting that it will be a little bit lower than what happened for the last non-farm payrolls. But really, the fact that this is happening on the first Friday of the new month, given that we just got a monthly candle printing, we do have a lot of bearish potential. And really, job creation, it's such an important indicator of how the economy is doing, because it's going to lead us to consider what people are spending, going to allow us to just develop a deeper understanding of really where people are at in their personal lives beyond what we're currently experiencing ourselves. And on the intraday trend here, we can see we do have a few possibilities. Now, the start trading signals group did enter sell positions. We were alerted right up around the whole 1270 to 1280 range. We didn't quite get as high as 1280, but we did have some nice sells. My best price was about 1273.3, I believe. And looking at how price is trading right now, we can even go, and of course we could consider something like a tick chart, but this doesn't necessarily give us the information that I'm looking for in this moment. Now, one possibility that I do see, considering we still have all of London session and the hours in between right now, and when the non-farm payrolls actually releases at 8:30 a.m. Eastern time, for those of you who need to do a conversion, it's about 10.5 hours from now, possibly 11. I could be wrong on that math. But the tick chart, this is more or less what I use in the moment where I'm looking for entries. I'm looking for that precision. Tick charts measure the number of transactions coming into the market, and we can clearly see it's counting up. So with the setting that I'm on right now, every 1,024 transactions that enter the market, it's going to print a new bar. So everything that's happened right here, this is essentially an entire week of trading. And it's really, really interesting to see patterns forming on this intraday basis. And really, it would not surprise me to see one of two things potentially happen here on gold for NFP. First and foremost, what we could see through London and up into the final moments is some bullish movement. And I'm going to, I don't think I can draw the, yeah, on the tick charts, it does not allow me to draw what I want to draw. Can't delete it very easily either, apparently. So we're going to go to the 15-minute. I don't necessarily like even using this chart. However, it can be powerful depending on the situation. So given what we have, given these last hours, what we could see is one of a few things. We could see some more continued downwards movement. And with that, we could get something like this for NFP, or even up until London. We really just have to see, and I'm going to draw these out according to the time. So let's just say London ends here. Now, this is one possibility that we could have on gold that would make sense to me. And this leads us right till 5. This would be the last 4-hour candle, essentially, that prints before the jobs report does release. It would be right in line with some structure. And if price gets up into this level before NFP, I would personally be looking for sells at 8:30. I would be looking to have my sells already in place, whether it's a limit order or simply taking a market execution, depending on where price is when I'm on the chart physically. If it's at 1270, 1271, even retesting the high at like 1273, I would have a very confident feeling in the sell for the data release. Now, that doesn't mean that we couldn't spike higher, and this is just one possibility. If we take that off, we duplicate it again, we could simply see price just do something like this. And Dylan is very, very good at doing these drawings. I don't really use the 15-minute all that much, in all honesty, but we could just see price kind of go a little bit lower and then consolidate within this whole $2 to $3 range leading up to NFP. This would be very surprising to see as the possible scenario, simply because of the level of volatility that I've noticed this week. Looking at my FX book, I mean, it shows that I caught 3,699.5 pips apparently this week. Not too sure how they calculated that because it was closer to 400, but I'm going to go ahead. We're going to take these drawings off. And what is one other thing that I feel we could see? I'm not necessarily going to spend any more time on gold because I do want to show you what my thoughts are for the dollar index. And just be aware, we do have a gap on gold that has not been traded within and filled yet. It's right before our area of supply. And this area of supply more or less acts like a magnet. It's like a magnetic force. When the amount of sell orders up here is imbalanced compared to the amount of people looking to buy down at these cheap prices, that is when we can see those rapid movements happen. So pay attention. We have the gap. You're aware of that. And my outlook, just to be as clear as possible, given the information that the chart has on the screen right now. Where could our targets be? Where could our best optimal buys be? I'm thinking between 1239 and 1243. That gives us a $5 price range, and I'm going to just put this on here. It can be a little bit difficult sometimes drawing these rectangles to the exact price, so we just got to tweak it and extend it out for you all. So this would be my best buy price. In the event where we do go back to the monthly, we consider the wicks, we consider this whole range in here, and a good target, if you are perhaps in a sell right now at this whole 1265 level or higher, would be even 1250. It's about $15 to the downside, 150 pips. That's a very perfect and powerful target in my opinion, because 1250, even psychologically speaking, if we look back at all of these months of data that the chart is giving us, and even a little bit further back, there's even some structure from over in the 2008-2009 year. Structure is very key when it comes to looking at the market, and with that, we're going to hop off of gold, hop over to the dollar index. Now, the dollar index, I've done the same kind of thing. I've drawn up what was a very powerful area of supply that really, in my opinion, just continued the momentum for the continuation of the downtrend that I see on the dollar index. If we look back at the weekly, we can see the structure even more clearly. Our most recent and most active area of supply right now is right at that psychologically just amazing 100 price level. And look at this. Look at what happened last time. We can see the 2000 year. We trade, we create this high. Mind you, this is only data for the last 20 years. So we can see a very nice candlestick pattern forming right here. 1, 2, 3 tests to this upside region. And then that was the shift into the downtrend. And through this entire experience, through these 8 years of just having all of this downwards action, we did retest our active area at that 100 level one time. Sure, we consolidated around it. We didn't really do too much trading at this whole 103 to 104 level. And if we go and if we look at where we are now, because that's what we care about, right? It's all well and good for people to speculate of what they would have done or should have done or could have done after the fact. But we're traders, and we really need to take the data that the market is giving us and make the best possible decision in that moment, real time. And it just takes recognition. It takes training your eye and really putting in the time to develop your skill set, and more than anything, your mindset. Because whether it's Dylan or myself or another trader that you've been able to connect with, we could show you absolutely everything that we know about how to approach and enter and manage your positions in the market. But without that mindset, without the foundation for your trading business, how far do you think you could really go? Now, looking at the weekly, we can see this trend line that we have so very clearly. And this bearish candlestick here in the middle of May, very good confirmation for the downtrend. If we look at the monthly, again, we can see everything very, very clearly. Right now, the last 3 months at least, and really all of 2017, there has been so much bearish momentum that this whole price range down here, this active area of demand, in my opinion, is where there's going to be a lot of institutional interest, a lot of hedge fund interest, a lot of professional interest. But the next level of structure is really right here at this whole 95, 96 price level. And you can see that very, very clearly on the monthly. And looking at this little tiny level we have right here, I don't necessarily feel as if, it's going to be very strong. And coming back to the daily, just consider this. We do have this 98 level. Given the fact that we're kind of consolidating on this area of demand for the last several days, and looking at it, we did have a gap. It was filled technically. We could see some upwards movement. And mind you, how do we translate this? Because I do know that there are some beginners on here that have maybe never even looked at the futures market. And when we're talking about the US dollar index, what this means is that if the dollar index is going up, typically we will see that same bullish movement represented on any Forex currency pair that starts with the US dollar as a base. So that could be the US dollar Japanese yen, that could be the US dollar Canadian, that could be, again, anything with the USD first. And the opposite is true if the US dollar is the quote. Let's just say, for whatever reason here, we're going and we're considering the possibility of upwards movement on the dollar index, and we're trading something like the US dollar Japanese yen, and we are seeing the same kind of pattern with how the last few days have been traded, noticing that there is a little miniature gap over here, and there's so much more to this gap than even what happened over here. And really, once you become aware of these concepts that really drive the market, I'd be curious to know, in your time trading, do you really feel confident in your understanding of how price is even moving? I explained it to you as clearly as I could at this very moment. Areas of supply are simply where active sell limits are sitting in the market. It's creating the liquidity. It's causing the price movement, that magnetic force to just pull price up into a zone. And if we, for whatever reason, see a upward spike to this whole 113.5, even as high as 113.7, which would kind of be pushing it in my opinion. But if we get a movement on the US dollar yen up to here, that could be a potentially very powerful sell limit. Mind you, that is about 200 pips to the upside from where price is right now. And really, this could be a very lame NFP. We might not see a whole lot of movement. It may be like 50 pips, 60 pips. But again, just the volatility this week has been incredible. Just so I can have a better idea on the monthly here, we do have this bearish candlestick, but there was a lot of interest. Notice our daily fib, that's 61.8, key reversal, key rejection. I do expect that we will see trading down to here once more, but I'm not looking to go too in depth with the Forex currency pairs on here. I really wanted the focus to be on giving you a broader perspective of the market and of what I feel is highly probable for tomorrow morning. So I'm really just going to solidify my thought right now, and then I'm going to check the chat, see if there are any questions, and then I'm going to introduce you all to somebody who has given me so much value, somebody who is helping just expand the awareness of the community, and I'm just very excited for being able to share this with you right now. Dollar index, most likely scenario, one of two. First and foremost, we could see something like a spike to the downside, some quick bearish movement, hit this demand zone one more time, and then in this zone, we could see price just continue to push down to our level of structure, or we could see rejection, which leads the movement up to this area of consideration. And perhaps by the time that we really get back into this whole area, we'll be in line with our trend line. Looking at gold, if we minimize this, come back to this, I would feel as if the bearish movement for NFP at least is going to be more likely. If price spikes to the upside, the whole 1270, 1273 area, I mean, to me, I would be looking for sells there. Very small stop loss, because if it continues to go with force beyond that whole price, I would expect this entire gap to be filled, if not a nice solid push up into our area of supply. So hopefully this analysis was insightful. It was recorded. It is recorded. You're going to be able to access it and just kind of listen to it again. Really pay attention to what I'm saying and just notice how you can apply this to the bigger picture and really just use it as a confirmation for the trading decisions that you're looking to make. If you're not in any trades right now, and if you're confused going into NFP because it's not clear to you, given all of the action that happens through London, of what could happen right there in that moment for NFP, sometimes the best thing to do is take no action at all. And that's going to potentially allow you to get a better entry once the price does give you the confirmation you're looking for, as well as it could just save your account. You know, it's not putting yourself in unnecessary risk. So that is what I'm going to be looking for. And remember, you are so very awesome for being here right now. You know, I'm definitely grateful. And I want to really just take a moment to introduce you all to Dylan from the Forex Investors Alliance. Now, Dylan and I, we've had the pleasure of trading together and really just expanding our awareness on the markets. He focuses his strategy similar to me when we consider structure, when we consider key price levels of interest, areas of supply and demand. But really, a lot of his inspiration has come from noticing what is the market maker method. And I mean, I would say at this point, the amount of value that Dylan has shared with the trading community and really just with the awesome signals that we've been able to collaborate between each other on too, there has just been such a powerful influence on my trading, being able to connect with him. And I want to connect you all to Dylan right now as well. So I would be happy at this moment to unmute you, Dylan, just because I know there was some echo. You might have to unmute yourself there. And really, I'd like to just hear your thoughts, what your plan of action is for going into NFP, and if you have any just nuggets that you want to share with everybody who's on here right now.
Hello, hello, hello. Can you hear me? Can you hear me, bro?
Yes, we can. I'm just going to mute myself so there's no echo.
Okay. All right. Thank you, Zachary, for having me on here. Thank you very much. I am very delighted to be here with you guys and have the opportunity to share on this broadcast. So I loved what Zachary had to say about NFP, the gold. I have the exact same thoughts. I do think we're going to see the upside movement, but I do believe as well that the dealer could spike to the low before going up to fill that gap, like Zachary was talking about. There's the market gap acts as like a magnet for price, and basically is a liquidity pool and fills up with orders. And the more time that the gap is open, the more orders fill in the gap. So obviously, the more time the gap is left open and not filled, the more liquidity will potentially be in that gap range. So as far as the NFP, I have a wholehearted analysis. I do think that Zachary has a great analysis as well. And Zachary talked about how important mindset is. He talked a little bit about your attitude towards trading and how you should set your mind to goals. And I was introduced today to a friend of mine, a good friend that wanted to learn more about trading. And he asked me if it was simple. And I said, it's as simple as you make it. Okay? It's not simple. Okay? You'll have to understand that you will lose a lot of money before you start earning money. But the amount of money that it takes for you to learn from your losses depends on you. So every loss is a lesson. Every loss, you have the opportunity to either learn and grow from, or just shrug it off as a loss. That is a real loss. That is the real loss. The real loss is not paying attention to your losses, not paying attention to what is being shown to you through losses, because every loss brings you closer to another gain. And every loss shows you something that you've done wrong, and it just helps you slowly progress into what you want to be as a trader. And the fact that losses are inevitable in trading just makes it so much more difficult for a retail trader to comprehend that you're going to lose. You're going to lose money, but it's up to you to learn from those losses and make those losses into something that you can mold into something a lot better. So with that being said, I'm not sure if Zachary has any more topics he'd like to talk about. I don't have much time for you guys, but I really loved being on here with you guys to share just a little bit of my thoughts and share how important it is to understand and develop a mentality that is adapted to losses and can take losses, and don't force yourself to be hurt from a loss. So thank you guys for tuning in, and thank you, Zachary, for giving the opportunity to have me on here and talk with everybody and share my thoughts. Thank you very much, bro.
Yeah, Dylan, I definitely appreciate it. And, you know, just like you were saying, those losses, they are a natural part of the process, yet they do not define who you are as a trader. The beliefs that you have about the market do. So thank you so much for sharing it. I did mute you just so that it didn't echo, but we really do appreciate it. And for everybody new on here, I would highly recommend that you go ahead, you check out the links in the description, and make sure that you join our chat room at forexcommunity.online. You can easily find that below the video, and you know, we have over 1,000 traders now in the community. It's really thriving, it's really expanding every single day, and we'd be more than grateful to have you in there. You can bring your questions, you can bring your insight, your analysis, and more than anything, we want to see your progress. So thank you for investing the time into sharing what was a very powerful Asian session analysis. There's much gratitude to you, and of course, appreciation for what we were just able to do in this co-created environment. Last shout out, make sure that you visit us, and remember, have some safe and happy trading. Make sure that you are aware more than anything.